Let me introduce first Mr. AV Rajwade, who's with us, Forex and Treasury Risk Management Consultant at AV Rajwade and Company Limited. Mr. Rajwade, thanks very much. Good morning, Prashant here. So this is what Arun Jaitley said in an interview, sir. And I'm just reading out the quote for you and our viewers. I'm sure you've seen the report, but just want to put this up first, straight up. And I quote, currently interest rates are a disincentive. Now that inflation seems to be stabilizing somewhat, the time seems to have come to moderate interest rates. Mr. Rajwade, your views, sir?
Well, I am an agnostic in terms of how much that will help in terms of encouraging corporate sector investment. Because let's look at the broad picture. I mean, if you look at the sort of 100 or your Nifty 50 or even broader market capitalizations, the interest as a proportion of the top line, that is of sales, is barely 2.5%. Now, a 0.5% cut in interest rates, I don't think it matters very much to industry's costs. I think what is lacking and what needs to be spurred by various government actions is the animal spirits, the confidence of the entrepreneur and investor in terms of future growth and so on and so forth. So I think, yes, interest rates might help. The industry has been demanding it. In terms of its direct impact, I think limited. I think so long as we continue to have the tax disputes, so long as we continue to have regulatory issues, I think those are that probably would help much more than say 0.5% or even 1% cut. Also, the inflation fall really, I think, has come not so much because of monetary policy, but because of two factors, neither of which are really much susceptible to Indian interest rates. Number one, of course, is oil prices globally have fallen very sharply. I think the last number is somewhere in the $83, $84 a barrel. So I think a sharp cut in oil prices, global oil prices, is certainly one reason. The other is food inflation has come down. There is no doubt about it. But once again, I do not think that that is the result of interest rates. I think what you and I eat does not really matter. The interest rates do not come into it. But I think industrial growth, IIP, remains very slow. And I think interest rates probably have a limited role to play in that. It's a bigger question, a broader question of how to make sort of make in India more attractive, as the slogan of the Prime Minister is.
No, absolutely. I want to just get your thoughts on when is the last time you had, the finance minister of the country openly calling for lower rates. Do you recall when is the last time we saw something like this?
No, not really. Not in those plain terms which Mr. Jaitley used. I think you are referring to the interview in the Times of India.
Yes, yes.
So no, I do not. I mean, not in such clear terms.
Do you think the RBI will feel the pressure?
To some extent, yes. I think if you recall Dr. Rajan's predecessor and the then finance minister, there were differences between them. But I think in terms of RBI, to my mind, probably far more relevant, also in terms of Make in India and so on and so forth, is the question of the exchange rate, not so much as the interest rate. And sort of one worry is, we are now a new chief economic advisor, Dr. Subramaniam, and I do not know whether how many people read his article a few months back, which appeared in the Business Standard, which on certain grounds, technical grounds, which will be difficult to argue in a very short interview, who has argued that the rupee is undervalued by 30%. Now, I think the premises on which that conclusion is based, to my mind, are not very logical. And I suppose now that he has been appointed the chief economic advisor, what he thinks or what his views are will surely count, at least in Delhi, if not with the RBI. I mean, if we have that kind of undervaluation, then the huge deficit on trade is very, very difficult to explain. I think the empirical evidence tells something totally different from his analysis of the PPP GDP changes on which he has based his conclusion. That seems to suggest, I think empirical evidence is quite different, and I still believe that a more competitive exchange rate would do more to spur growth, investment, job creation than maybe a half or even 1% cut in the interest rate.
No, when you say undervalued, you mean the currency needs to appreciate to be at fair value.
No, that is Dr. Subramaniam's view. That is Dr. Subramaniam's view. Yes. It was an article, op-ed page, Business Standard.
I know. I read that. I read that. Just to be clear, that's essentially what Mr. Subramaniam is arguing, that it's undervalued. It needs to actually appreciate to be at fair value, right? Exactly the opposite of what you and others have said for a while now.
Absolutely. In fact, if you look at the number, 30%, that would mean that he wants the rupees somewhere in a little above 40 rupees to a dollar. I don't know how many companies or how many businesses and manufacturers in India will be able to compete at those kinds of rates. I think the premise is wrong, the number crunching is wrong, but then now he is the chief economic advisor.
But how does it, I mean, if you want to encourage local manufacturing in a big way, how does this view, which I'm sure he's going to be telling the government as well, the finance minister as well, how will this sit in with that, with the aim of actually encouraging local manufacturing in a big way?
Well, in my view, it cannot. In fact, regulatory measures do not work as has now being increasingly reported, which is exactly what I was arguing more than a year back when Mr. Chidambaram brought in those import duties on gold and so on and so forth, that all that this will do is encourage smuggling. And today what we are sorry about that. Today what has been reported in the newspapers that Swiss gold exports to India have gone up very, very sharply, and their suspicion is that something like $10–12 billion of gold imports from Switzerland have been paid for through the money parked outside India by Indian residents, for tax purposes or whatever reasons. So I think the regulatory measures, the Prime Minister is supposed to have written to the ministries that they should try and curb unnecessary imports. I think economic incentives and economics matters much more to these things rather than regulatory prescriptions. So I think we are seeing that in terms of gold smuggling, the sharp increase, and I am reminded of the 40 years when gold import was completely banned. Every year Dubai will report huge exports of gold to India, and India would report zero import from Dubai. And I think the conclusion was obvious, that gold was coming in. It was being paid for through the Hawala, so-called Hawala market to the Dubai exporters. And I think we are back to that situation. Like financial markets, I sometimes wonder whether policymakers also have very short memories.
Interesting. So, Mr. Rajwade, what's your sense? I just want to go back to the point I started with, Mr. Jaitley's comments on about interest rates. so far the evidence that we've seen doesn't suggest that this is a government which wants to strengthen institutions like the Reserve Bank of India or other outside regulatory bodies, right? You think, eventually we'll get to a point where institutions like RBI would be left with the job of actually operationalizing policy as set by the government, and that's about it?
Well, I certainly hope not. I think giving just a single point agenda to a central bank, control inflation, I'm not very sort of happy about it. It has been tried elsewhere, hasn't really worked except in Germany. But then the Germans are very well known for their discipline, their ability to produce differentiated goods where price is not the main consideration. I'm not sure whether that's going to be workable. Also, in reality, if you look at what the European Central Bank is doing today, it has a single point agenda, which is controlling inflation. Now, what it is neither able to sort of bring up the inflation to the level it wants, that is 2%, nor is it able to spur growth despite pumping money in the economy on an unprecedented scale. I think the balance sheets of the Federal Reserve, the ECB, the Bank of Japan have grown to gargantuan sizes, and yet inflation is nowhere in sight. So I think the sort of age-old assumptions about money supply or interest rates influencing inflation, whether in the upward direction or downward direction, I think that seems to be breaking down very much. If it was at any point a very close correlation, but I think recent experience that these central banks are trying to increase inflation to about 2%. They are not able to bring about that despite any amount of, and interest rates are practically zero. So that connection, or the theoretical connection between money supply, interest rates, expectations, etc. I think one factor which we are missing out in terms of the inflation debate is the demographic pattern. We are the youngest major economy in the world in terms of the average age. And I think the inflation is also very much a function of the demographic pattern of a country. We can see this very clearly in Japan, which has the oldest population in the world. And it has had my memory is that the nominal GDP has continued to fall. In other words, inflation has been negative for a very long time, at least since 1997, I think.
Mr. Rajwade, thanks very much for your time, sir. Good talking to you. Appreciate you coming in, sir. Thank you.